In this module we're going to be having a look at accounts, bank, credit cards and the like, interest rates and credit rating. So bank accounts, first of all current account, their features. Well, the great thing is that your money is going to be highly accessible, but the downside is that this is going to be at the expense of interest rates. They're generally about the lowest interest rates on offer, looking at all different types of account. There are debit cards which are available, and this enables you to draw cash from a cash machine. It enables you to purchase goods and services in shops without having to carry money on you, and you can obviously use that over the internet as well. Checkbooks, they're available, and obviously it is a way of writing to somebody, or business, a sum of money in payment for goods and services, and that will take just a few days to clear from your bank account. There's an overdraft facility, or can be, and this is subject to negotiation with your bank, and dependent on the account which is on offer. Some do offer this, and some overdraft charges can be quite significant. So if this is something that is important to you, you need to make sure that you choose the right current account which is going to fit in with your needs. There are direct debits and there are standing orders. Direct debits is when a company, such as a mortgage company, will be making debits to your account covering the cost of your mortgage. A standing order will be something like if you're giving to charity and it's a regular, let's say, £10 a month, then there will be a standing order set up, or there can be one set up to make that payment on a regular basis. Current accounts, they can be internet only accounts, or they can be high street and building societies can also offer them and do offer them. Savers accounts, features of these is that money is somewhat less accessible. The benefit is that you can enjoy higher levels of interest rates. There's usually no debit card facility. There may be notice withdrawal requirements if you're going to benefit from the very highest level of interest rates, particularly when it's a high street building society. There may be sort of a 30-day or 90-day notice before you can withdraw the money. If indeed you do draw down money before that notice period has finished, then you will lose interest on the money that you're withdrawing. Similarly, there can be other restrictions on withdrawals. Internet accounts usually offer the highest levels of interest rates, and the best buys can be seen on moneyforlife.com. Historical bank base rates. This is to illustrate that interest rates do vary and have varied considerably over recent history, and there have been different terminologies. It's bank rate today, it has been called minimum lending rate, repo rate, and such like. And today it is 0.5% is bank base rate. Historical low, as we can see there, but we can see back in the late 1970s it reached 17%. This is great news if you're a saver, earning sort of something around 17% on your savings in a building society or something of that nature. However, for many people there are loans. We have mortgages, we have credit cards, we have other loans, and the cost of loans will be affected by these bank base rates. So good news for savers, bad news for the borrowers where we have high interest rates. But certainly if we look on here from 1992 onwards, interest rates have been consistently fairly moderate, in the region of 6 or below 6%. Okay, so what we should take from this is that just because interest rates are low now, they probably can't go any lower, they can only go up, and interest rates over time can fluctuate quite considerably. So if we're taking on debt, we need to think about our ability to pay that debt, the interest on that debt going forward, so we don't overborrow and overextend ourselves. Credit card and prepaid cards. Let's have a look at credit cards first of all. Minimum age to have one of these is 18. They are not linked to any current account or savers account, so you don't actually have any money in any of your accounts that you're spending. All of your spending is actually on credit, so you very easily can spend more than you actually have in some other accounts, your current account or savings accounts, if you don't take due care. The payments are required within 29 to 59 days following the transaction, and you get monthly bills, monthly statements, and then you can pay them off in full to avoid any interest charges, or else you can pay the minimum sum and you will start incurring interest charges at the prevailing annual percentage rate of interest, which tend to be very, very high, averaging something in the region of about 18.4%. Credit card application is dependent upon your credit rating, and we'll have a look at this in a later slide. The features of different cards are quite plentiful. Some offer 0% annual percentage rate of interest. An annual percentage rate allows you to compare one card with another. The card which is offering the lowest APR will be the cheapest for you in terms of borrowing money, if that's what you're wanting. There's 0% on balance transfers, so if you've got a credit card which is charging you 18.4%, there may be another credit card which is offering 0% balance transfer. There may be a transfer fee of say 3% on that, and then you could benefit from 0% for maybe 12 months, more or less. And providing you don't make any more purchases on that card, all that sum which you have transferred will be interest free. If you start making purchases on that card, what will happen is that those purchases will start incurring interest charges, and you cannot pay off that new debt before you've actually paid off your old debt, which is actually enjoying 0%. So if you have transferred your money onto a 0% credit card, it is a good idea to have another credit card where you can make further payments, or purchases rather, and you can then pay that off such that you can enjoy that 0% for that balance transferred for however long you've been able to secure it for. 0% on purchases, that can be good. So it could be for 3 months or 6 months, but bearing in mind if you've actually transferred some money on 0% for 12 months, if your 0% purchases are for 3 months, those goods will start incurring charges, interest charges, after that period. And if you don't pay off the whole sum, including the balance transfer, you will start incurring interest charges. Cashback, loyalty points, they too are some of the offers which credit cards can put forward to you. There again, best buys can be seen on managedmoneyforlife.com. Credit card and prepaid cards. Prepaid cards now. These are not linked to any account like credit cards. However, the key difference is that you cannot use them until you've actually put some credit onto them. And this is great news in so much that it avoids you getting into any debt. There's no interest which is paid on money in the account, and there are a few charges which you should look out for. There's an application fee. In some cases there can be a monthly fee. There generally are transaction charges, and these can be more or less in UK and foreign countries. Cash machine withdrawal charges and loading charges as well. So these are some things that you should be looking out for. There again, there are some best buys at managemoneyforlife.com. Credit rating. These will affect everyone's ability to obtain credit, whether that's for a credit card, because quite often there are variable interest rates depending on whether you've got good credit rating or not so good credit rating. Similarly, if you're going to want to secure the best mortgage with the lowest interest, you're going to need to have good credit rating. Similarly on loans as well. So if less than perfect credit rating, a loan will perhaps cost you higher rates of interest, and it may be that you'll be declined altogether. What impacts your credit rating? Well, being registered on the electoral roll, employment and the length of employment, your current basic salary, which excludes overtime and bonuses, your age, and the length of time that you've lived at your current residence. If you've had any county court judgments against you, if you've been declared bankrupt. If you own a house, this is seen as positive. However, if you've been getting behind on your payments, that will be negative on your credit rating. If you've had proven ability to pay council, water, gas bills on time, similarly credit cards on time, and failure to make a payment when required will obviously be detrimental to your credit rating. Indeed, your partner, where you've got shared financial responsibilities, will impact on your credit rating. So how do you check what your rating is? You can purchase a report, and on some websites some are offered free of charge even today. But the three agencies which can provide you with this credit rating are Equifax, Experian and Core Credit. If you've got a credit rating and you identify there's an issue, something which is not correct, then you should bring this to the attention of whoever, not the credit agency, but whoever has an issue, whether that's the mortgage or a credit card provider to you, and you need to resolve that with them. The agencies, the three agencies above, are then obliged to make corrections within 28 days. And this ends this module, and then in your own time, please click on the next seminar. Thank you.